Hey, what's going on, everyone? Welcome back to another episode of Smart Money Sundays. I hope everybody is doing great. And first off, I want to apologize for last week's episode. I put together a great videos, 20 plus minutes long. Thought I did a really good breakdown and established a great narrative for the week. And then I posted it, and then I realized that the audio didn't work. I'm not sure what happened. It was very frustrating, and it put me in pretty bad mood, and so I just shut the laptop and walked away. So I apologize for that. I believe it's working now, so we should be good to go. So let's go ahead and start off here on the euro dollar. And this one, we've been tracking very nicely for quite some time with the higher high, higher low, higher high, higher low. The natural expectation was that we were going to price in another higher high, right? And so we were looking at kind of 1.1250. And last week I talked about in the video that no one could hear. I was looking at more so 1.1280 in terms of an objective, right before we saw some sort of potential retracement. You can see also, if we pull our Fibonacci, we have fulfilled that sequence into that negative 27 very beautifully, right? And hence the reaction and the pullback that we're potentially seeing at the moment back into discount, right? But overall, I am still very bearish on the dollar as we continue to make these higher highs and higher lows and higher highs. I will be looking to continue to buy Euro USD and really every single dollar pair across the board until we see some sort of significant structural break on the higher time frames, right? And so for the here and now, for this week, again, the expectation is or what we should be doing is looking at retracements as excuses to continue to buy this pair. And naturally, our first point of interest is going to be our previous level of market structure, right? Our previous high within market structure. So that comes in at around 1.11 flat, right? Institutional round number, right? So this previous high looks like we're approaching that now. But again, if we think about this from a premium discount perspective, right? Tapping into 1.11 isn't necessarily discounted price, right? We would certainly want to see that discounted price before looking to buy. However, it is still a POI because it is our previous high, a potential kind of break and retest situation here. All right, so 1.11 I do have marked off. If we do get lower time frame accumulation and manipulation and a reaction back off this level, I will look to continue to buy, taking out previous week's high. All right, but I also have a previous kind of lower time frame market structure level previous high at 1.1 as kind of a secondary point of interest, right? If we do kind of break lower, trade deeper back down into discount, obviously we have some inefficiency in here as well. But overall, I'm looking at this level as our secondary POI for continuations. Hopefully by that time, if we do get down into here, we'll have that daily 50 EMA as nice dynamic support, okay? But the overall narrative is pretty clean, right? Again, we didn't tap into that 1.1280. This isn't a high in the market, in my opinion. We're just seeing that kind of picking up more orders, that repricing, right? Retracement for overall continuations. And ultimately, I do think, we can get deeper up into kind of 1.1450, 1.1500 very easily. All right, that's certainly on the cards. And if we if we're following this overall higher time frame trend, right, the higher high and higher low sequence, if we pull the fib here, right, you can see that negative 27 aligns very beautifully with the previous level, previous horizontal ray that I've left, right, in and around 1.1450. All right, so 1.1450 would be a very nice target to look for continuations long on EU when it's ready. Okay. So let's hop on down to GBP USD. Kind of similar situation. Again, like I said, everything is pretty much in alignment across the board here on these dollar pairs. Dollar weakness is the theme. We are seeing those retracements at the moment. On GU, we have traded into a previous significant level, right? Previous high within market structure. Again, down close here, right? So we've traded into that. We closed into this on Friday of last week. And this area is kind of where I'd expect to see some sort of significant manipulation, right? Every single retail trader, right? Everyone who just, has picked up a textbook, right, to learn how to trade is looking to buy off this level, right? So we got to be patient here and let the market makers weed those people out, right? Let them get triggered and kind of sell stops, take out their stop losses for the premature buyers, and then we'll look to get long on this, right? So it's not quite ready yet. I do have a level here, 1.2807, and this is kind of a lower time frame. I'm not going to do it here, but there's a lower time frame repricing event, kind of a supply to demand flip zone in the lower time frame. Just remember this level and zoom in. For the sake of time, I'm not going to do it. But something that I'd like to see would be something like a run on the highs, or a premature break of BOS, or a lot of people will call it. All right, get the people excited to look to buy upon the pullback, right? And alternatively, what often happens is we get that fake BOS, then we get another subsequent run on the lows, and then we get the manipulation, and then the follow through, the real BOS, and then we can see that pullback for the continuation. Right, that type of model is what I love to see. Right, I'm very wary in situations like this where we're continuing to kind of make these discrete lower lows. We have this market structure, and then we just break it. And I'm very wary of just buying upon that break. Oftentimes, more often than not, you'll see some sort of run, right? Get people excited, think that we're breaking structure, right? It's never that easy. More often than not, we run that low again, and then we have the true break. So just be patient, just relax. We are trading into some interesting levels here on GU, and so we'll just let that setup come to us, right? When you know, right? But if we kind of zoom out a little bit, just thinking about this logically, right? This is our higher high, higher low that sprung into the higher high, and so this is our entire trading range here, right? This is the higher low that produced the higher high, and so price could very easily trade all the way back down into our last point of return, right, which is where we have this kind of doji candlestick, this inefficiency that was never accounted for. And so if we do breach lower, right, we have some more dollar strength enter into the market, then this would be my secondary level, 1.2650, or then I'd be looking for another higher low and another higher high sequence, right, into 1.3280. All right, so just keep all that in mind. Keep those levels there marked off on your radar. All right, Aussie dollar. Now, the Aussie dollar has traded into a higher time frame objective, higher time frame POI that we had talked about for quite some time, many episodes ago. Traded into that, had a nice spring, break of structure, clean, clear break, sustaining above, obviously, previous high here. Right, and then we pulled back, and what I wanted to see ultimately, as price was trading in here, was a run on this low. Right, I want to see that run on the low, and then I'd be more confident in looking to take out this previous high. We didn't get that. We got kind of a W situation. Right, we got that double bottom, that retail double bottom, then we pushed higher, and now we've created relative equal highs. Okay, so this one, right, while we are looking for longs, right, because we did trade into a POI, we did break structure, right, and so naturally we should be looking to potentially take risk at these levels, right. This is my initial POI from last week, 6,750. Got the reaction, not the follow through. We weren't interested in taking out the highs yet, so we got that reaction, took some partials, broke even. I do have a secondary level here. Can't remember the time frame. Really, this area of demand in here, 6,700, nice institutional round number. I will be interested in looking for accumulation or reaction from this level, right? But at the same time, the understanding that, okay, we have a double bottom here. We have the W pattern. We didn't take out the previous high. So let's zoom out for a second, right? If this higher low failed to produce a higher high, then our trading range, our previous trading range remains intact, right? This original range that was created when we took out market structure, this is still our range. Right, so this is not a valid higher low in my opinion. Right, and so we very easily could liquidity resting beneath these lows here, take that out, trade into our original POI here, right, and then see that massive rally. Right, and in fact, I kind of favor that. Right? It's just going to be dependent on if we're going to see some more kind of significant dollar bull momentum or not, right? So I'm still interested. I'm still looking to buy if we get confirmation, at these levels here, looking to buy into our equal highs here. But I wouldn't be surprised if we saw a run here because we never took out that low. All right. So just think about that. Keep that in mind as well. NZD USD. Now, NZD USD is somewhat of a similar situation. All right, this one did trade into a POI here that I had marked off for quite some time. Trade into the POI, traded into a supply, reacted, right? Supply failed. We didn't create a lower low, right? We breached, right? And relative to this high, we've now created that higher high sequence, right? So low, higher low, or excuse me, higher high, higher low, higher high, right? So I do think we can get another drive cycle, third drive cycle into the highs, back up into these further premium prices, 6,450 into 6,500, right? And so I do think this one very well could trade deep down into discount, right? Deep down into higher time frame area of demand, higher time frame last point of return, right? Taking out the significant singular wick low here, right? And that appears to be what it's doing. We could have a very, very, very nice risk to reward trade on the table here, right? So trading into this demand, right? We'd have that higher low, look for that higher high, right? Back up into at least our flip zone here. Okay. So I do want to just see this low run out at least, right? And we can put a fib on this as well, just for confluence purposes, right? Potentially down into that 78.6. So I can even expand this into the 78.6 here, right? And this is really my buy zone, right? Because it's below this previous low, trading back down into deep discount, higher time frame area demand. All right. So that one looks quite nice in my opinion as well. Don't get fooled necessarily by this momentum, right? We've created a nice higher high, higher low sequence here. All right, so that's in U. USD CAD, right? Kind of the inverse here of what we've already looked at. And again, we've been talking for quite some time about 1.3050, right? Into 1.3. Nice institutional round number, right? That price point before where we saw the down close before the massive bullish engulfing, and that imbalance was never accounted for, right? We never repriced this market. All right, and so we are trading back down into that now, right? With the further dollar weakness expectation that we're seeing across the board, I'd expect the same on USD CAD until we get down into those levels. All right, so on this one, I do still like our level here. I have it on the 1 hour time frame. I mean, you can see the wick here. You can see there's a lower time frame demand. We reacted, we flipped. And so I'd really like to see us get up into this premium price. You can fib it as well. All right, getting up into that kind of golden pocket, 71, 78, 6, 1.3320. 1.3320, I'd love to see that. And we have that nice negative 27 extension confluence with our higher time frame area of demand. All right, so if we can just get up here, a quick run up into supply, into premium, I would certainly entertain continuation short on USD CAD. All right, so keep that level on the watch list. UJ. All right, UJ has traded into, again, significantly bullish on USD JPY as well as really all of the XXX Japanese yen pairs. Previous high, right? Significant area of price. The down close on the higher time frame. We traded right into that, and we're seeing a really, really nice reaction, right? And this is, meanwhile, we never traded into our true area of supply, right? We came very, very close, but then we just kind of melted away. And this is not a high in the market. What's fast often doesn't last. And so we're seeing that continuation occur at the moment. And on this one, I will be looking at kind of lower time frame potential reactions, maybe from this level, right? But I'd really like to see price get back down, right? After, zoom out a little bit, right? We have that initial high, higher low, and we saw a really, really clean leg, second leg to the upside on UJ. You know, if we can get that retracement on down into, and I'm not going to zoom into lower time frames, you can do that yourself, but really kind of 138.40. If we could see that, that would be fantastic for an overall high risk to reward swing trade back up into our highs, up into 145.20. All right? So if we can get that, that would be great. If not, it's not the end of the world. All right, Euro GBP, right? We kind of zoom out on this one a little bit. Daily time frame. You know, we traded into an old significant flip zone here, right? Supply, reaction, fail, flip. We traded into that just a couple weeks ago or last week, can't remember. We had equal lows, right? And while trading into that, we liquidated the equal lows, and it appears to be that we're breaking structure. Right, and so we could see a very nice rally here on EG back up to the upside, back into the kind of 8750, 8800 threshold. Right, so with that said, I will be looking for pullbacks as excuses to buy EG. And I can't remember the time frame I was looking at here, but really digging back down into kind of 8580 would be really nice. All right, for an overall continuation. All right, so that's my level there on EG. Pretty self-explanatory, pretty clean. Just looking for excuses to buy, looking for that manipulation, the sell to buy at the right time and price. CAD JPY, again, very similar to UJ, right? All the end pairs looking to buy XXX JPY. We do have some clean flat highs up here to target, which is great. It's just a matter of can we get that overall retracement. All right, and again, this is kind of that type 2 manipulation, right? Low, lower high, just run out that previous low, and then we break, breach. All right, so it's very clean. If we can just get into discount, you know, a nice down close candle here, which ran out liquidity coming in at around 104.85. Right, so this will be the level that I'll be watching out for come this week. All right, it looks really, really good to me. GJ, very similar as well. Overall, we have equal highs here. We are bullish. We're in an uptrend. The pound is pretty strong. We ran out equal lows here. All right, liquidated that. High, failure to create a lower low, higher high. And so I'm looking at this 20-minute area of demand here. Right, singular wick low. Right, which if we can trickle down here and run that out. Whoops, I don't know why I have a fib here. If we can trickle on down, right, maybe run the high, run the low into our demand here, right, this last pause, right, before a significant high volume bullish engulfing candlestick, get down into kind of 181, 180.8, then I'll look for that continuation into our previous highs, right, back up here into 184. Looks quite nice in my opinion. All right, so lots of good looking setups coming into this week, guys. AUD CAD. Overall, right, remember we ran out our equal highs here, ran out the low, accumulated beneath the low, traded into a higher time frame area of demand here, kind of like AU and NU. Seeing that strong reaction. We haven't broken structure yet, but that's okay. This is just more so an intuition-based thing, right? We're just not going to run the high, run the low, and then immediately run the high. It doesn't often work like that. So we are trading into a down close candle here, right? But I do think if AU and NU can have a little bit ways to go to the downside, then so could AUD CAD, right? And so I do have this level here, this kind of last point of return, in and around 8850 as a potential level as well. Right, so it could see one more intraday leg lower and then see that run higher, right? But overall narrative is looking for excuses to buy AUD CAD. CAD Swiss franc. All right, overall CAD Swiss has been significantly bearish for quite some time, right? We have our old low here from back in May. Price is traded into but not through, so that's a nice draw on liquidity, right? That's a nice excuse, right, to sell pullbacks. And I'll be looking for any excuse really to sell this one, right? At least until those lows are purged, right? And so from last week, we have the manipulation, to sell, to buy, to sell, right? I think if we can start off the week here running lower and then get that manipulation again higher, here's our supply, pretty clean, pretty straightforward. Potential nice intraday selling opportunity there on CAD Swiss. Euro NZD, looking like we're seeking out the buy side liquidity here, resting above this old high from April. That appears to be where momentum is taking us, and so I'll be looking to buy retracements, and our natural level here is this down close before the boom, big high volume bullish candlesticks enter back into the market, create that higher high. All right, so 1.79 would be great, would be ideal to go ahead and take that out. Right. Last one is gold that I don't really talk about too often. But gold is running up into old highs. Right. We've got the equal highs here, right? And this high here from early May also didn't take out this high. So tons of buy side liquidity resting above here that we can look to target, right? In terms of buying pullbacks. We haven't traded into discount yet. Right, so I think potentially what we could see here is an ABC corrective phase, right? A, B, C correction, and then that overall push into that liquidity pool. All right, so we could see flip zone here, or a nice area of supply right around 2,000. If we do trade a little bit higher, perhaps we can get a selling opportunity kind of from this area of supply as well, right? And then overall, understanding the overall narrative of the fact we have very clean equal highs, right? Ultimately looking to buy from these discounted levels, right? In here, 1855, and then our lower time frame accumulation flip zone before the big bull run commenced, all right? So again, potential sell into a buy to take out those highs. All right, guys, really good video, really productive. Got right to the point as usual. Hope you enjoyed it. Hope you have these levels marked off and are ready to tackle the markets this week. Again, just be patient. We understand the levels. We trust the levels. We have to trust the levels. We have to trade our plan, understanding time and price and lower time frame confirmations, which we do teach in our courses. If you are interested in kind of learning how the ins and outs of how we do our analysis and how we exactly approach the markets, feel free to shoot us a message on Telegram at ArielFX Trading. We'd be happy to jump on a call with you and discuss our mentorship options as well as our prop firm automation side of things, where we do past challenges for the folks in our community. We also have some account management spots open as well. So again, hope you enjoyed it. Please give us a like, comment, shoot us a message if you want us to critique any of your own analysis, or if there's a pair that I didn't touch here that you'd like us to go over. All right. Love you guys. Really appreciate it. We'll talk to you again next Sunday. Thanks.